when 10-year-old kids picked shares against chartered accountants. The 10-year-old kids picked better stocks and made more money. How did the 10-year-old kids do that? We will find out in this video. It's said, if the base is good, then the building will be great. So I have came here today with this video to make your stock market base strong, so that you will make so much money and build your own buildings. Hello friends, I'm Anthony Gonzalez. And today we will clear all stock market basics. Beginners get scared by just hearing share markets names. In films, we see the share market destroys everything, but your friends are claiming that they are making lots of money. Besides that, your family members says to stay away from it. Above that, if you had studied commerce in school or college, still there's not exactly told correctly about the share market. In that case, it's normal to have confusion and nervousness. But today, after this video, all of your confusion will be cleared and you will find out how to pick best stocks. First, know a fun fact to pick your interest in stock market. If you had invested in Wipro 40 years ago, I know you might not have been born then, but someone in your family had invested 10,000 rupees in Wipro shares. So today, 40 years later, it would be 700 crore rupees. I know, you might be thinking who had 10,000 rupees at that time. If you invested at least 100 rupees at that time, that would also become 7 crore rupees. So this is the potential of stock market. From this example, you must not think that somehow enter this market. Definitely, there are risks in the market. As there is profit, there is loss also. There are many such stocks where, if you had invested 700 crore rupees, it would be 10,000 rupees now. So this market can bring you big profits and big losses too. But so you make a little loss and gain more profit. I'm going to discuss with you those 4 major points you should study before investing in any company. So my friends, let's start. First point is profit and sales of company. Main objective of any business is to make profits. Sales and profit are main pillars of any business. You should see profits and sales of company which you want to invest. Keep in mind, sales and profit of company must be growing annually. Quarterly ups and downs in sales and profits doesn't matter much. Growth in sales show that products of company have good demand and company is able to fulfill the demand. Profits growth shows that business model is good and company is sustainable. Next point to notice is debt on the company. Debt is the loan taken by the company. Company takes debts for expansion of their business. Take care that debt should be minimum against the cash hold by company. Generally, good debt to equity ratio is around 1 to 1.5%, which is considered good for any business. Next is promoter holding. It is very important thing as many people neglected it. Promoter is the person who has started the business. In other words, he or she is founder of the company. Promoter holding is most important point for any business or company you select. It shows the faith of promoter on his business. It is one of the major factor in stock market as it determines the future of the company, which affects on the share price. You must see that promoter holding should be more than 51%. Also, you should stay away from companies where shares are pledged by promoters. Be sure that pledging should be 0 or minimum. Last and most important point is business of the company. See how the company makes money, how it generates revenue. What are the products of company? You should always invest in business you know. As a beginner, you should select the business you are known to. In simple words, you can invest in the stocks of companies which products you use, as you are known to the company and its products. As I said at the starting of the video, that one time in the US, there was a survey where 10-year-old kids, they were told to pick in basket of 8 to 10 shares, and at the same time chartered accountants were also told to pick in basket 8 to 10 shares. Where chartered accountants are very educated in finance and where 10-year-old kids. But after 5 years, after seeing whose shares got more returns, the kids outperformed the chartered accountants. Now, what do kids know about engineering, commerce, or arts? They know class 5th maths, Hindi, English, and science, which you have also learned. So you are also ready to battle with chartered accountants. Now, how did they do that? Understand this thing? As they were kids, which companies did they choose? Cadbury, Disney, Barbie, companies like this which they interested in, and which they are customers of those products. So who knows a product better than a customer, as the kids used their products and picked them. Which means those companies were satisfying their customers, so that company had to do well. That mostly happens. That's why they outperform chartered accountants. Where chartered accountants read long balance sheets and who knows what complicated financial calculations, but didn't see the ground reality. If you are in civil engineer, then select real estate companies. So select those companies which you can judge and you will do pretty well. Let's hope that you liked this video. I will be bringing you more such videos. Until then, this is Anthony Gonzalez signing off. Bye bye. And if any of your friends or relatives wants to invest in the share market or you think they should learn to invest, share this video with them.